Amazon is positioned really well for 2024. I want to hear what that analyst has to say. And then I want to react to this analyst here, Amazon, hear why Moffett-Davidson analyst favors the stock. And Amazon is the third biggest position in the public count, so I think it's an important one to kind of hear what these folks are saying. Then we're going to get into this one. This gentleman's going to speak about a lot of tech stocks, Amazon, and many other stocks in this video, so I want to hear his opinion and react to that one.
Stocks and their impact on online advertising into 2024. Our next guest forecasting 11% growth in the online ad industry, naming Pinterest a top pick, along with Meta and Alphabet, just raising his price target for each of those names. Joining us now is Colin Sebastian, Senior Research Analyst at Baird. What kind of signals are you getting, Colin, that lead you to the optimistic growth forecast on online ads?
Yeah, thanks and good morning. So, really it boils down to the state of the internet sector is quite positive. We're seeing revenue growth accelerate in many cases. Margins are expanding, and there's line of sight to a lot of product innovation. And along with the fact that valuations, at least in historical context, are not really stretched. So that's what keeps us excited about those names you mentioned and others across e-commerce and social media.
It looks like you have a buy on nearly all the stocks that you cover, everything from Alibaba to eBay, Meta, Pinterest, Shopify, except for maybe Airbnb. Is it just a rising tide lifts all boats when it comes to online ads?
Yeah, that's certainly part of it. The reality is we are seeing this year and into 2024 really a resurgence of secular growth trends across digital media, online advertising, e-commerce. We certainly have a preference for the larger platforms. And, in a year where there are a lot of macro uncertainties, as you've just been discussing, we do have a preference for the higher quality companies, so those like Meta, like Amazon, like Alphabet. But there is room for companies like Shopify and Pinterest that in themselves, are emerging as higher quality technology and consumer internet companies.
Yeah. Where does AI, Colin, factor into all of this?
I do not. I want to repeat. I do not like Pinterest. I do not like Pinterest. I do not like Snapchat. I do not like companies like that. I didn't like Twitter when that was a public company. I felt like all those type of companies are just too niche. And in the advertising market, when you're competing kind of against the Metas of the world, I think, you want to have scale. I think it would be great if many of those companies had partnered up and all became one big conglomerate, kind of like Meta is with WhatsApp, Facebook, Instagram, right? But unfortunately, split apart, I feel like they show weakness.
Particularly around Amazon. I ask you because one of your peers on the street today over at Raymond James makes Amazon their top pick. They're looking from laggard to leader in terms of AI. It seems like so many other companies are the ones dominating the conversation here, but what about Amazon?
Well, for Amazon, on a broad level, you have that same context. You have faster growth, expanding margins, market share gains in online retail, and recovery in cloud. In terms of AI specifically, Amazon's strengths are fully in the infrastructure layer. And where they lack some momentum is on the application layer. That's where Microsoft and OpenAI have shown a lot of progress. So for the year ahead with Amazon in AI, they need to show more momentum in the application layer, things they announced recently at reInvent. That being said, we still think the stock is positioned really well for 2024.
What does Meta have to do to back up the kind of year that they just had? Not suggesting in any way they're going to, do 200% return on the stock, but to have any sort of outperformance, what has to happen?
Well, first off, on historical levels, the stock trades below its typical earnings multiples. So, I think compounding earnings growth will be enough for Meta. Aside from that, there's still a lot of concern around competition from TikTok, for example. And there we're seeing Reels continue to take market share. Stories is still driving a lot of monetization on Meta. The part that may be less well understood is the fact that messaging, WhatsApp and Messenger, these are emerging as new billion-dollar businesses for Meta. We think that's going to be a major theme in the year ahead and one reason why we like that stock.
Yes, 100%. They always miss. WhatsApp. And it's like, does anybody understand how many people use WhatsApp? And that's almost an untapped monetization opportunity that Meta's just going to start tapping into over this next few years. Woo-hoo-hoo. Okay, once again, Meta just has the beautiful thing about Meta and Amazon. Let me explain this to everybody. so everybody understands why that's the number one and number three biggest positions in the public count, okay? Listen, those two companies have so many growth levers all over the company to pull from. I love business models like that. That's why it's the number one and number three biggest position, because those companies all over the place, they have growth levers. Like Meta has so many monetization opportunities that are so untapped. It's incredible. It's like, your house being under, I don't know, a gold mine or something like that. And it's like you can just go under and there's just a bunch of gold under there. You can dig out or whatever whenever you want, right? And that's how I feel with Meta. Same exact thing with Amazon. Like when you think about how many untapped opportunities there are for Amazon to grow over the next decade, it's unbelievable. And so that's why I feel very comfortable in those sorts of stocks. And that's why they're both top three positions in the public count. Let's get more into Amazon here.
Releasing a new note with the 2024 outlook for internet and e-commerce names. Joining us now is the analyst behind that note, MoffettNathanson's Michael Morton. Michael, happy holidays. Great to have you here.
Hey, thanks for having me.
All right, so Michael, hard not to notice here that your picks are very closely tied to consumer spending. Making these your top picks, is that also just a proxy for your confidence that the consumer will continue to spend in the new year?
Yes, more specifically, it's a reflection of where we think the consumer is going to spend. I would say Shopify is an exception to the rules. There's always exceptions to rules like this. But the consumer in 2023 will likely look similarly in 2024, and that will be a preference towards experiences, which are measured as services, and non-discretionary goods. If you look at our covered companies that sell things you don't need, they've really struggled to grow post-COVID as there was a huge pull forward. Amazon has a great exposure to non-discretionary. They get it to you faster than anyone, and we believe there's a lot of upside to profitability in their retail business as you see leverage through their logistics.
Okay, so let me disagree. I disagree with this gentleman, okay? I definitely disagree with him. I believe the consumer in 24 is going to be very different than the consumer you saw in 22 and 23. Whereas, 2020, 2021, obviously goods, right? World closed down, no travel, none of that stuff. And so it was all like good spending, right? 2022, 2023, very heavy on services. The world opens back up. People want to go on trips. They want to go here. They want to do this. They want to go to concerts, all this stuff, right? Taylor Swift, Beyonce, oh my gosh. I think 24, we're going to get back to a much more even economy. And so I think the spending is not going to necessarily sway hard to either side like you saw for the last really 4 years, to be quite frank. I think we're going to look at a consumer in 2024 that's very, let's call it even keel with their spending between goods and services. And I don't think one's going to necessarily outshine the other. And so ultimately who benefits from that is going to be goods. It's going to be the goods sector. It's going to be the e-commerce players, right? It's going to be the Shopify's and Amazon's and those sorts of companies, because if anything, they're going to take some market share away from services that have been the kind of bright light over the past few years. But it even goes, you even got to look more on a global basis, right? So for instance, I'm wearing a Wynn hat, right? If I think about Wynn Resorts, I think Wynn Resorts is going to tear it up in 2024 from the Chinese side, right? The Macau side, because China just really opened back up for real this year in 2023, right? And so 2024 is going to be a huge, I think, growth year for Macau overall. And I think that's going to benefit them in a huge way. If I look at the United States, then I feel a little bit different. I feel like it's going to be a little more, let's call it a little rotation more to goods, and it's going to be more of a balanced approach. So you even got to look at it more on a kind of let's just call it a little bit of a worldwide basis.
And Uber, as we all know, if you're trying to go out to dinner with family and friends over the holiday, travel to the airport, it's a great way to play the consumer's interest in experiences over things they don't need.
So is that the reason why you actually lowered your price targets on DoorDash and Etsy?
Yes, DoorDash and Etsy both have slightly different issues. DoorDash is a stock that we love when we initiated on it in January. It's the profitability thesis has really played out. We are concerned about food delivery and its exposure to the same consumers that own student loans. If you look at the overlap of the app usage age to the overlap of where much of the student loans that restarted in October sit, it's pretty much a 1-for-1 ratio.
Wow.
And, again, we think the delivery business is a great business that's been misunderstood for a long time, but the consumer is going to see this bill show up at the end of the month with student loans kicked in October, and we think that food delivery could be one budgetary area they might cut their spending.
Really quickly, since you mentioned Amazon as a buy, what do you think of today's news that they're going to start showing ads on Amazon Prime Video unless you want to pay an extra $3 a month to get an ad?
Food delivery, it's funny. Something that's made me a little less bullish on food delivery is it's amazing how many times I'll go on Uber Eats or DoorDash and then won't end up ordering something because, man, you really get hammered. Almost every restaurant in place charges more on Uber Eats or DoorDash than they do like if you actually just ordered from those companies. So you're already paying more for the product, and sometimes it can be several dollars more per item, right? Then you get hit with a million different fees that they charge you. My gosh, it's this fee and that fee and this fee and that fee, right? Then you got obviously your taxes. Then on top of that, you got a tip, right? And I don't live that close, because the way they built Vegas, the suburbs and the nice communities are like way out there. And so to get something delivered in my house, it's like quite a far drive. So I feel like I have to tip minimum $6 to $10 every time. So when I tack it on, I'm like, this order is costing me $20 to $30 more than if I just went and picked it up, or my wife went and picked it up, or things like that, right? And so I don't know, man. I maybe I'm the only person that feels like that, but sometimes I'm just like, I don't know if it's really worth it. So, I don't know. I think if you maybe live in a big city where everything's really close together, like a New York City, a San Francisco, maybe it's a little bit different if you live in downtown LA or something like that, right?
Version. How big of a deal is this for investors and for the company's financials?
Yeah, there's a lot of things to interpret through this news. First, it shows a cultural shift that has occurred in Amazon over the last 12 months. Again, as part of our thesis that there's a long run of profitability beats coming in the future, but that it's no longer just a free-for-all subsidizing everything under the sun. The second point is we love the strategy that they've taken. You've seen other companies that are starting to layer ads in where you need to opt in and say, hey, I want to see ads. Amazon, in very clever fashion in the way they like to operate, you need to opt out. So by default, you're going to start seeing these advertisements, and it will help subsidize the billions and billions of dollars that they spend on content every year. So it's just another check of the box reflecting this business's forward-looking emphasis on profitability growth.
Yeah, Amazon, let me just let him finish and then I'll speak on that.
Yeah, for Amazon, I don't mind paying for Prime, but there's something about having to pay that extra $3 to not have ads. Michael Morton from MoffettNathanson, thank you for your picks. Appreciate you. Have a great day.
So the thing that is so sneaky with Amazon, no one talks about, right? Everybody, obviously the e-commerce business gets attention. AWS gets the most attention. But the sneakiest thing with Amazon's business model, and one of the other reasons I love Amazon stock, is because of the advertising business. No one really talks about it. It's grown into a giant, and it just keeps growing and growing. And now it's really the third, in my opinion, it's kind of the third pillar of their overall company. Okay, let's listen to this gentleman speak about some tech stocks here, including big position for me, Amazon.
Ask traders and analysts to go big or go home. We challenged them to give us their best idea on the stock that they thought had the biggest potential upside heading into the fourth quarter. Now it's time for a progress report. Let's bring in James Chakmak, partner and portfolio manager at Clockwise Capital. His pick, Amazon. The Magnificent Seven member had already put in some strong gains throughout the first 9 months of the year, up 59%. The strong run continued in Q4. Amazon up another 20% with just 2 days to go. You know what? Go ahead, James. Take that bow. Pat yourself on the back. I'm going to clap for you. What a pick there. Congratulations. We gave you your props. We got to move on now. Looking ahead to Q4, what are you expecting for Q4? Are you expecting Amazon to continue to be strong? And if so, what's the catalyst for that strength? Is it the e-commerce business? Is it the cloud business? Is it the ad business that's kind of a sleeping giant? It's a $12 billion business last quarter.
Yeah, Frank, I think it's all the above.
Really?
Now there's talks about reports on advertising being part of the Prime Video experience for 2024. So that would just be incremental on top of everything. But really, the driver for Q4 is going to be about continued operational efficiencies and adding earnings power to the bottom line.
Estimate target 175 for 2024. So that's not that big of upside, right? Amazon's 150 plus right now. And then he's talking about the stock would break 200 in 2025. I think if the market's decent, let's call it a 5 to 10% gainer for the S&P 500 in 2024, I think Amazon probably breaks 200 in 2024, assuming the S&P 500 is up in that 5 to 10% range.
That's what we saw for the last 2 quarters, and I think that trend will continue. And when this has been a stock always talked about how expensive it is, north of 100 times earnings. How can you buy a company like that, even though it's cheap on a sales basis? But I think within a year or two's time, you're not looking at an expensive PE multiple anymore. This is a company that is trading in the 30s on a PE basis just 2 years out, giving the earnings power of the company. So, we continue to like it, see about 15% to 20.
So right there, forward PE is 52 on Amazon. And yeah, I mean, if you look at Amazon, if you've researched Amazon stock any time in the past 15 years, really honestly since the company went public, but let me just speak about since I first looked into Amazon, which was probably either 2010 or 2011. I was like, man, this Amazon company is just going to keep growing. Like more and more people are going to be ordering online. I was starting to order a few things from Amazon here and there, kind of around 2010, 2011. And I was like, this just seems like, a company that's going to get bigger and bigger. I wasn't even thinking about AWS back in those days, right? But I remember looking in the company and it was expensive. The forward P was high. Guess what? It's always been high. It always will be high. But then Amazon eats that up. They eat that up because they get more profitable. Then they'll take a step back in their profitability. Then they'll all of a sudden emerge a lot more profitable. I think you'll see in 2024, 2025, this company, you're going to be pretty shocked by the earnings per share this company's going to put up over the next couple of years. It's going to blow people's mind. They've been in a huge investment cycle over the last several years. And I think we're going to see Andy Jassy really put together some crazy EPS numbers over this next couple of years here. That's going to make everybody say, oh my gosh, Amazon at $100 and at $150 was actually a cheap stock when the stock's 200, 250, 275. And, they'll look back and be like, wow, we didn't see this EPS coming. I've seen Amazon do it several times throughout its history, and I think it's about to do it again. So we'll see how it all transpires. But, it's always going to look expensive. As long as Amazon's got good growth, it's always going to look expensive, right?
An upside in 24 and another and about 35% to 40% through 2025.
All right, so you're maintaining that conviction in Amazon. I kind of teed you up with the ad business. We're actually here talking about the fact that you're going to have to pay extra to avoid the ads on Prime Video next year. When I'm watching The Boys, I don't want to see ads, but that's my problem. I'll digress. I'm going to look ahead to your pick for 2024, and it's Coinbase. You have a lot of conviction when it comes to the cryptocurrency space. Just looking at the Coinbase chart, huge year for Coinbase. Then you look in Q4, up just about 150% this quarter alone. Give us a sense. What's a catalyst for this stock going into next year?
Oh, sir. What's a catalyst for the stock for next year? If Bitcoin goes up. Literally, if Bitcoin goes up and it's at 60,000, 70,000, something like that, guess what? Coinbase stock's going to go up a whole bunch more. Like, it's as simple as that, right? If Bitcoin price, let's just say, starts kind of sputter here and it doesn't really move above, like, let's say 50K, then Coinbase stock will actually start falling. And then obviously if Bitcoin was to go down in any substantial way, Coinbase stock would fall substantially.
And so this is a company that we wanted to own basically since the IPO, just couldn't justify the price. We finally got in August before this run up. So fortunate on that front. But, when you have a tremendous run like this, it's really hard to say, okay, it's going to go further. But we think it will, and not only go further, but go further in a big way. We're looking to increase our exposure across the entire crypto bucket, whether it be through miners, through Coinbase, or what have you. So, Coin specifically, I think that the street is just not fully appreciating the revenue potential of this company. The reason we bought it in August was because the street's estimates essentially assumed that Bitcoin would not appreciate $1 above 28,000. Obviously, that was wrong. Now, when you look into 24, 25, the street is currently assuming 0%.
Anybody that was buying Bitcoin in the past year made a big mistake. Should have been buying Coinbase. You got over a double up of the performance. By the way, Coinbase, I got to say, man, it was a pretty interesting buying opportunity at the beginning of this year. And the reason being is almost all their competitors went under in 2022, so you didn't have to worry about that anymore. And obviously, Bitcoin was in a pretty depressed state where no one seemed excited about it at all. I mean, the price was all the way down to, 15K or so? So, yeah, I mean, the risk reward was, pretty attractive there, at least at the beginning of the year. It's a whole different story now at this point.
Growth from 24 to 2025. And we think that's outrageous. So we think a lot of upside to revenue, a lot of upside to earnings. This is a must own.
Yeah, Coinbase certainly going into the new year with a whole lot of momentum. James, stick with us just for a moment. We want to talk about the world's most valuable company. It's, of course, Apple. It's had a pretty solid year from a stock perspective. Shares are up about 50%, but it has not felt that positive if you're an Apple investor. The company reported several quarters of falling revenue, and it faces a litany of challenges as we head into 2024. Steve Kovac joins us now. Steve, good morning. Great to see you. Is the path a little clearer for Apple to return to growth next year?
Yeah, let's go over this because this is the biggest question, Frank, for Apple investors going into 2024. Will it finally return to that top line revenue growth following 4 straight quarters in a row of declining sales? And on top of that, Apple said to expect flat sales for the current December quarter. Despite that, Apple shares, it's part of the Magnificent Seven, just soaring all year. And now, looking ahead to 2024, what could return to growth? We got good news and bad news. Let's start with the bad news. Headwinds in China. We know Huawei is returning, coming back and putting out new smartphones again for the first time in a few years. That is real competition for Apple. There's some data out there that people are switching back from iPhone over to the Android Huawei phones. Meantime, we're also this online gaming crackdown from the Chinese government, which, these online games and certain restrictions around them, that also could damage Apple's App Store revenue. And of course, as we've been talking all year, that slow economic recovery in China. Over to the U.S., though, Apple, that watch ban is still being worked out despite the reprieve yesterday. That fight is not over yet. And now the good stuff. Services growth, re-accelerating that high-margin business. It was up 16% in the September quarter. And there's also, on the hardware side, some signals that PC and smartphone demand may have bottomed out and could start growing again. Here's what won't move the needle, though, Frank. The new Vision Pro. That headset is going to be a small launch, possibly as early as February. It's going to be in the U.S. only at first. It's not a mass market device, Frank, but it's going to be interesting to see how Apple sells it.
So, Steve, you mentioned the Apple Watch news. How big is this for the company?
The best news for Apple, in my opinion, for 24, and the reason their revenue could start trending back up, is consumer confidence, right? If the consumer gets in a better spot in 2024, they feel more confident and they're just in a better financial position because they're not sliced and diced by inflation. That's good for all these big dog companies, including an Apple, in a substantial way, right? So, maybe the people that have pushed off buying a new iPhone over the last couple of years, maybe get out there and get one at some point in 2024.
In 2024.
Yeah, I'll point to what Morgan Stanley analysts have said, looking forward to the March quarter for Apple. They're basically saying 2% of revenue is on the line. It could be up to $135 million for every week the watch is banned. Now, they have this reprieve right now. They're going to be able to sell the watch here in the U.S. starting yesterday and then online today through at least January 15th until the next beat in this legal fight continues. In the meantime, Apple is working behind the scenes to kind of change the software to potentially get around these patent disputes. But it's not a done deal yet, but at least for now, there's a little bit of reprieve for the first couple weeks of the new year.
All right. Our Steve Kovac, live at the NASDAQ. Steve, thank you very much. All right. James Chakmak of Clockwise Capital still with us. James, coming back over to you. What is your take on Apple's year ahead?
Yeah, I agree with Steve. They have a litany of challenges to overcome. But that being said, I do think that estimates have indeed bottomed out. And I think that the dark horse for their business is going to be on the PC side. As long as you see that Mac business reaccelerate, I think the status quo on the other lines, continued traction on services, should be able to propel the stock higher. Now, that being said, I'm looking at about $210 as I look at 2024 numbers. So I think it's going to be a safe and steady grower and appreciator, especially as those estimates bottom out and you revert back to growth. But I'm going to be putting my big bets elsewhere.